This conference will now be recorded.
All right, so welcome to Level 2, Lesson 1. And as always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so let's talk about what we're going to be doing this week. So the first thing is, obviously, last week we went over prints and basically what we're going to be looking for, and how those prints are going to work. At this point, we should understand our 1 through 4 trades and what we're looking for. So now what we're going to do is we're going to use the live market, and I'm going to teach you how to think, all right? How when somebody calls something out, where our mind needs to, immediately end up going to, how we're going to look at all the possibilities. Basically, what we're going to do is we're going to take everything that in these past 3 rounds of classes that we've talked about, and we're going to put it into action. All right. So the first thing that I want to start with is, how do we look at a stock that's called out? And I'm going to say called out because is there really any difference between somebody calling something out and you finding it on your scanner? Is there really any difference whatsoever? No, because what happens is that once we pull up a stock, we have to look at it in a certain way. One of the biggest mistakes that a lot of people make within their trades is they try to trade a story when we're trading, instead of looking at it actually as a trade. Everything we see, for instance, I mean OMTX, I just pulled up. When we look at this, is anything that's happened up until this point help us within a trade? I usually pull it up and decipher if it's trading smoothly or not. So we're going to get there. No, nothing else is going to help me. So when I see a stock going straight up, what's my number one thought? What should my immediate thought be? So when coming back to reality, so first of all, it's too pretty, but can we chase stocks? Can we chase stocks and be successful? We cannot. So technically, anything to the upside right now, could we trade it? No. So what it's going to do is understanding that it's going to help us decipher what we need to look for. Because in a case like this, yes, it is way too cheap. Would we ever take a pullback trade? No, because there's just not enough room for it to be able to pull back and go into. So we'd have to look for a long trade, but we need our trades to set up for us. Now I'm going to pull up CAN, C-A-N, right now, and we're going to look at this brand new. So what's the first thing I need to know about CAN? Where does my mind immediately go? What should my first thought be looking at CAN right now? Our print personality, right? Because I need to understand before I could even go into anything if this is worth trading, if there's actual money that's going into it. So then the first thing that we're going to do is we're going to go down and we're going to see about what the print personality is. So let's start. What is our print personality here? As we're looking and we're seeing, what is our print personality? Yeah, so 3 is the real answer, because obviously, there's a couple of bursts that are above 3, but for the most part, we're going to be looking at 3. 4 is always going to be safer. So one of the things that we want to understand is, depending on your level of trader, the level of trader that you are, if something is under 4, is it something that you should be looking at as a newer trader? No. Why not? Why is 4 so important? Why is that number 4 that we really want to look for? So 3 is very close, but we're going to look for 4. Why 4? Yeah, so the minimum we want to see ideally for our rules, and the reason behind that is because of the fact that, if it's under 4, if they're printing bursts in less than 4, a lot of what's going to be happening is hidden. All right, so we want to see something that's actually showing us what goes on within the stock. So now what we need to do is we need to find, so what's the only reason we look at a stock? So the number one thing is that it's moving, right? We need volatility in order to be able to trade a stock. If a stock is not moving and it's not showing us actual trading in it, do we have a chance of it getting as far away as quickly as possible from our entry? And obviously the answer there is going to be no. So we need to make sure that it's moving first. The next thing we need to know is what its print personality is. Okay, now this is all under the assumption that the stock has volume. Okay, if a stock doesn't have volume, I don't care what you see, you can't trade it because it doesn't really mean anything at that point. So now we want to go to our prints and we want to see what something that stands out. Because even if a stock is moving, if we do not get some type of controlling prints, can we even look at it for a trade? Who looks at movement? Who is interested in movement? Retail. Okay, market makers create movement. Retail is the people that trade movement. So if we're trading movement, that means we're retail trading. Who loses their money? As blunt as I can be, who loses their money? It's not our market makers, it's retail. So we never want to be trading with retail. We always want to find something that stands out big time in comparison to what the stock is actually doing. So now we go back to what Derek said. Derek, is this a smooth trading stock? Because we don't always have to trade a smooth trading stock. There's stocks that are going to tell us exactly what's going to happen within them, even though they're not trading as smooth. But why is a smooth trading stock so important for us? Why are we suckers for smooth trading stocks? What's the reason behind it? Helps us with our mission statements, follows the rules, but that's the big one right there, less shakeouts. The smoother a stock shows you that it's trading, the more of a chance that on a trigger, it is not a false trigger. Okay, make sense so far? Everybody's with me, perfect. So now let's look at our prints. We have beautiful ask prints that came in at 18. Okay, what does this immediately tell us? Now we know we can't trade a stock that's going straight up because that would be chasing. So our immediate thing, right, our immediate reaction to these prints right now have to be what? So a number one trade, right? So a number one trade is really at this point the only thing that we can do. Now we talked about possibilities. Okay, is there enough range within this stock for a number one trade to make sense? Because when we see the possibilities here, when we see that the stock, the way that it's moving, okay, we have to look, does it pull back enough? Is 25 cents enough for a pullback trade if it shows us that it's trading 25 cents? And obviously we missed this trade, guys, but we're going to break it down because we all know that number one was the answer. Okay, no, why is 25 cents not enough for a pullback trade? Are we going to make a full 25 cents if a stock pulls back 25 cents? Does it really leave us any type of risk versus reward going into it? It doesn't give us enough. There you go, Christian. We can only make 60 cents on the move, and that's not enough for the risk for reward. And that's exactly what it is. It's just not enough. So what's the minimum that we need a stock to show us that it pulls back in order to be able to take a number one trade, or if it was bid prints, a number three trade? 50 cents. If the personality does not show it moving back 50 cents, you immediately have to follow the prints, because there's two ways that we can go about trading this. Okay, number one is to let it pull back under 18 and then take it long, which is a number 4, right? Or the number one, if the possibilities show us that there's enough. So we know our print personality is 3, correct? We know our print personality is 3. Is these prints at 18 over print personality? I know, really dumb question, of course, but obviously, what was our reaction? What was our reaction to these 18 prints? Right, Tracy? Duh. What was our reaction? Okay, so these two bids, do they stand out in comparison to immediately after 809 to 815? What's our actual reaction here? Who came in and showed us this is what I'm doing? Buying, right? So if we're in this trade, we know we're going to have to get out because it's a number one trade to pull underneath 18. But when we see this reaction, did we have to get out immediately if we were long? Let's say we had prints at 18, we pulled back, we took a trigger back up. Would we have to? Would we have to immediately get out? No. But what would our time frame be? What would our time frame be in this stock? Shorter time frame. Why is that? Who's in more control here? The 18 controlling prints or these 809 to 815 reaction prints? Who's actually in control of what the overall stock is going to do? The reaction or? So it's always the market maker. Like Tracy just said, always the market maker. Okay, we start a trade at 18. Who's dominant in the stock? At 18 or above 18? Who's the dominant person here? The market maker at 18, correct? What did this person show us? We talked about what those reaction prints mean and the fact that they're off level. I know they're 810 and 815, so it kind of gives us even a stronger chance, a stronger percentage for the pullback because they're not technically off level. But did this person show us building or position or trade? Yeah, they showed us a trade. Why did they show us a trade? Why is this a trade rather than it showing us building? Even though it's slightly over print personality, why is it a trade? What type of prints are these? And not for nothing, guys, but this is one easy trade. Yeah, it's showing us the short. That's showing us the now prints. They're showing us a position that they're looking to make money on, versus showing us that they need to pull back. Now we know it needs to pull back a little bit, but remember what possibilities are. So when this stock pushes up to 19, what does this story now tell us? So we know the dominant market maker is way over print personality, correct? Way over print personality tells us what number trade. Way over print personality and ask tells us number one. Then the reaction shows us that in the short term, we still have room to the upside. But who do we always interpret the prints from? What is this reaction? What is a reaction interpreted from? What do we always interpret? The controlling prints we're following from the market maker. Our show of hand, which is, perfect way to put it, because that's technically a show of hand, is our controlling prints. How much did they tell us that this stock needs to pull back? How much does the stock tell us it needs to pull back? So 50 cents is not enough. Why is 50 cents not enough? Print personality tells us the stock needs to move 50 cents, right? What's print personality? It's 3. How much over 3 are these prints at 18? A lot or a little bit? So if on average it needs to move 50 cents, is it more than 50 cents? Pretty simple there, right? The math tells us more than 50 cents. But now we got to understand personalities of stocks. What's the number that it's coming down to for 50 cents? Why is 1750 such an important number? It's a psych level. So technically, even though we know it needs to pull back more than 50 cents, what does our price target have to be? 1750. Now we know it needs to come back more, but we got to think of it like a trade. What are the chances of playing games at 1750? High or low? Very high. If there's a high chance of the stock playing games, even though it told us we need to pull back a bunch more than 1750. In all reality, okay, we want to look at it as a trade first, but we also want to understand really where the reality is. What number is the real price target here? Because remember, we know 1750 has to play games, so we have to be ready. Why is 17 the actual number? Why is 17 the actual number that we'd be looking for? Because remember, we're putting this all together. So we have to look at our puzzle that we have here. Why is overall 17 the number? Number one, we know it needs to go lower than 1750, correct? What do we have sitting right here at 17? Major support level, okay? An orb line. What is the orb line going to act as it continues on its way? Well, support, but what is the support going to do to it? Yeah, like a magnet, right? So we know that depending on that, we need to look at what our prints at 1750 were. Okay, so when we come into 1750, we can see, did we get any strong selling into there yet? Nothing that stands out, right? So technically, what do they need to do? Bring it back up to get more interest in it, to then show us more of that selling to break underneath this. But let's go back to what the original trade was. Okay, we have 18 way over print personality. We have the 1850, 809 to 1850. Let me get back to those. I want you guys to see this as it's happening. So we know 18 way over print personality. We need to come in. These prints told us short term, right? Okay, so short term prints followed by big prints that need to pull back. What percentage here was our trigger? Pushing in to 19 and not hitting it with a trigger down. What percentage trade did we have to just take off of just those 18 prints alone and their reaction? I mean, technically 100% because it just happened. 99.9. We're in the 90s, guys. That's in the 90s. So you're seeing a reaction of short-term position coming in. You're seeing a huge pullback needs to be warranted. When this trigger came, statistical chance of this not working out was so minute, all because we just understand how to read it. We know when a stock goes straight up, can we go long? If the stock goes straight up, is it ever going to be a number 3 trade or number 4 trade? Ever? No. Okay, and number 4 trade can happen. So if we got beautiful ask prints at, let's say, 19, and then it pulled back under the 18, could we go back to 19? We absolutely could. But in this situation, did it show us anything? Just looking at these prints, because one of the things that you have to understand is that it's just as important to understand what to ignore as it is to what to follow. Did we need to really know anything else besides what we saw that this stock was pulling down? At all? Well, the fact that it didn't hit that pushed into a level, it didn't hit. That's why we're in the 90s, Tracy. That variable itself is in the 90s. So we add that variable to everything else that we just saw within this. It was perfect. Guys, as soon as we saw that 18, where did our mind go? As soon as we saw those prints at 18, what happens? So we got beautiful buying, the stock's in an uptrend. Oh, it sounds great, but exactly. So we knew exactly what we were looking for. Now our supporting prints get so important because it helps us understand time frame. Okay, if we would have came up and we would have got beautiful off-level prints and it just kept buying going into the tops, well, our time frame gets extended a bit. But we didn't have any of that. We knew immediately upon someone getting the 18 ask prints showing us to build. Okay, if they're showing us to build, do we want to go towards the prints or against the prints? Let's break it down again. Against. And I hate saying against because you're going against their overall move, but you're going with them with what they're telling you needs to happen first. All right? So knowing that right there, knowing we have the short term, it told us, get ready for your trigger. Now, let's say we didn't even understand the reaction. Okay, because reaction is a huge thing in understanding what our actual time frame is going to be. But let's say we didn't get that the reaction to those was going to be shorter term move to the upside and then coming back down. Could you have just been waiting for a trigger, even if you didn't know that? because of how absurdly over the print personality 18 was? Yep. And we made the decision that it pulls back enough. It pulls back at least 50 cents when it shows us ask. So it gave us plenty of room. We also know that 1750 has to be our price target because any psychological level, you cannot expect it to continue past it at first. So in reality, how hard was this trade? How hard was this trade to understand? Pretty damn simple, right? Oh, it's easy when broken down, but see, this is where our minds have to go. Okay, hoping for a pullback, and that's something that people get is that there's a bunch of prints over print personality and hoping for a pullback. We need to know, is the pullback possible? And that's the type of prints that we look, because everything that we've seen so far is just being interpreted by over 18. Now, there's a big lesson here as well. Your number ones, okay, you want to be of absurdly above the print personality, right? Because if the more it's over print personality, the more that they show us, the bigger the tip of the iceberg, the bigger the iceberg is underneath the water, because that's just the tip. So when it shows us that much at that 18 level, okay, am I smart to go long when it only broke under 1750 barely? Would that be a good trade and a good way to interpret this stock? To go back long? Remember, everything's got to fit the puzzle. Was that enough of a pullback based off of how much the stock was printed at 18 over print personality? It was not. So a trade to the long side here isn't really ready yet. So we're still focused on that number one trade because it really does need to pull back more. We know 1750 is also psychological level, so they're going to come back test it again. No, but you have to. So when we say take off exposure coming into the cycle, you're absolutely right. All right, but what if we would have got great off-level prints? How would that change at 1750? Because nothing stood out at 1750. Technically, that's why the stock is going back up. There was just nothing really there. What if we would have got great off-level prints going into 1750? What would that do with the percentage that we would take off? Would it raise the percentage we take off, or would it lower the percentage that we would be taking off? No, it would lower it. Because you're better off. Those off-level prints breaking into 1750. You got to think of psychological levels, basically the same way that you would think of concrete. We talk about this all the time. It needs to be broken down because the level itself is so strong because of the people that are looking at it, okay, that it needs to be broken. That's why it says, guys, how often does a stock just blow past 10 and never come back, or blow past 17 or 20 or whatever number? How often does that actually happen? Where it just blows past it and just doesn't do anything at it. It happens at a very low percentage. Okay, things that happen at a very low percentage will have an opposite effect of a very high percentage. So that's why we know when we're coming to levels like that it's a very high percentage that there's something that's going to happen. So it's even more important at those levels to see the prints that help break it down. Because this stock just pulled back up. Why did it pull back up? Why did it pull back up above that 18 and not continue down from 1750? Even though over the person we saw at 18 told us the pullback is bigger than 1750. Why? Yeah, they had to get more interest. There was no interest coming into there. If there was interest and they was going to keep continuing down, they would have got into it. They did not. So this pull-up, the substance of this pull-up, we actually know the reasoning behind it. Because there just wasn't enough at that 750. They had to get it back up, create more interest to then get to then be able to bring it down underneath. So this part of the chart, we actually know everything about. Now, obviously, with time and sales makes it even easier because you can just see exactly what's happening. But it tells us a whole lot about this movement. Was this movement to go back and make money yet after interpreting what we saw at 18? It was not. So if it's a move, if the stock is moving and it's not to make money, what is it to do? Take money, to steal. When you're trading the pullback and M needs more and the market makers need more and pulls up, if you are in it, how do you know and get out? Spots. So for instance, we take this trade right underneath 1990, let's call it a 94% trade because there was really less than a 10% chance of this not working out. When we see that getting back up, okay, we set spots. We know 1750 is going to play games. Okay, we also know that on the breakdown is statistically speaking, will we get another entry to be able to get back in? Yes. So technically, where would your spot be here? Where would your spot? Obviously, at 1750, we have to take off a portion, but what number would be the spot where we take off the rest of it? What would be our number? Let's keep it nice and simple. 18. That's simple. If it breaks 18, guess what? You know what? We're out. Because then we know that more than likely we're going to get another chance to end up breaking it down. If we don't get another opportunity, more than likely it's going to get stuck in consolidation because they showed us the interest at 1750 was not there. So we know it needs to be somewhere up here. Okay? And if there's not a lot of interest, what does that mean for the time frame of a consolidation? It's longer consolidation. So isn't it crazy how we can know all this stuff based off ask prints at 18? If we got great ask prints at 19.2, will we still anticipate a pullback below 18? Your chances go even higher, Madovic, because think about it. The more levels a stock goes without doing what it showed you it needs to do, what does that show us for the percentage chance of it all happening at once? Okay, that's the way that you have to think of that. So if we have 17 ask, doesn't pull back, 18 ask, doesn't pull back, 19 ask, doesn't pull back. Now at this point, what number do we want it to get to? 20. Why 20? That's funny. I don't think I've ever in my life said I want a stock to get to 20. That level sucks. But yes, it's the next psychological level. All right, so where is the best time for stocks to come back to reality? Psychological levels. Now let's take a look at the prints that are coming in right now. Okay, 59 to 60. What kind of bursts are we seeing coming into this stock now? For the most part, 72, 73, 70, 59. What are we seeing here? We're seeing a lot of bids. Okay, are these short-term prints or are they longer-term prints? Shorter term. So now what does it tell me about the next trigger to the downside? High percentage or low percentage based off the prints we have, and we're interpreting everything from those guys at 18. The next trigger down, we get an even higher percentage now. Because technically we have to pull up a little bit when you get a ton of selling all at once. It's got to pull up a little bit, but it doesn't have to pull up much. So it's telling us the time frame within this consolidation is coming to an end. So what we're going to be looking for now is that next trigger towards the downside. We want to see it obviously break 1750, and our price target is now going to be 17. The funny thing is everything that I tell you though is all based off of who? Who is everything based off of? 18. Every single thing that we're looking at is based and interpreted through the eyes of 18. Why? Why is that so important? That everything we do is interpreted in the eyes of 18. Why is that so important as a tape reader? So they're the market maker, but are they the market maker or from what everything we've seen up until this point, the dominant market maker, because you're going to have stocks, guys, sometimes where you have 5, 6, 7, 8, 9, a ton of market makers. You see a ton of different people that are trading it. Has anyone even came close to that guy at 18? So who's controlling the stock? Guy at 18, right? The guy at 18 told us it needs to pull back more than 50 cents, didn't he? Or she, whoever the hell it is. I don't really care. Did they tell us it needs to pull back more than 17.50? They did, right? So let's go through the prints and interpret some things. Does this 1760 mean anything to me? Looking at this 1760, does that mean anything? Does it? Okay. First of all, it's in a consolidation. So we talked about this. Does it hold more or less weight in a consolidation? Less. Difficulty of trade. It is not hard to trade in a consolidation. It's all available there. Okay. Means nothing. Okay. Now, this is basically just all selling. What about this 1790, 1787? Does that mean anything? Now, why doesn't it mean anything? So it's in a consolidation. It doesn't mean that all prints in consolidation don't matter. Obviously, there's prints that are going to matter. But why do these specific prints not mean anything to us? Does it fit anything the guy at 18 told us? Does it fit anything? Okay, whether it be the guy at 18 is telling us it's time to go up or it's telling us to go down. Those are the only two things that we care about. So if prints come in that don't fit anything to do with the main person controlling this stock, do they matter? Remember, everything needs to be interpreted by the guy from 18. Does this in any way tell us that the guy at 18 is going to make money? Or the guy at 18 is going to pull it back more? Does this do anything to give us any information that fits with the guy at 18? It doesn't. So if it doesn't fit the person we're following, do they matter? No, because this person right here, they know the stock eventually needs to go above 18. Who knows what the hell they're doing? It doesn't fit. It doesn't matter right now. There's nothing to, and that's it. We don't care. It does not fit anything for what the stock needs to do. So that's telling us, is this person working with the person at 18? No, right? So they're not working with the person at 18. They don't matter. Because whose game plan are we following? Are we following anyone's game plan, or are we everything being interpreted by the dominant market maker that we saw? And obviously the answer is it's all the dominant market makers. So these prints mean nothing. They're basically just, they just get in the way. They're completely to be ignored. Okay, we come back. What about 1830, 1829? Do these guys mean anything? No. Why don't they mean anything? This one's an easier answer. It's below print personality. That's simple. It's garbage. Doesn't mean anything. What about 1825 right here? Do those mean that it's short term, that the stock needs to go up to 19 now? Remember, where's our mind until this stock pulls back an acceptable amount from what the 18 came in? Where does our mind go? 1750 is going to be a pain in our ass. We understand that. It's a psychological level. There's always going to be games. We have to assume there's always. Okay, the amount of times that there aren't games at a psychological level are so small compared to the giant percentage of games happening. So we're always going to assume there's going to be games being played there. We know it's not an easy place to break past. Okay, but this guy at 825 doesn't mean anything. Doesn't tell us a thing. Because until this stock pulls down within pretty much about 20 cents of 17, can we even in our minds think long yet? Did the guy that came in at 18, way above person out on the ask, tell us that anything up until this point, until it gets there, does it mean anything if it's not following what they said? No, it means nothing. Okay? So this is a really easy way to filter out the garbage because everything is interpreted from those ask prints at 18. Anything that just doesn't, like, for instance, these 1751, someone will sit there and try to interpret these. They don't mean anything. These prints, nonsense. Why does the selling mean something, though? Why every time we keep seeing these selling prints, and obviously 1750 is going to slow things down, pull us back up, but our reaction tells us for not that long because 1745, the reaction that came in. So we know we need to pull up, but we also know the time frame shouldn't be that far extended. So the thing is that everything that we're interpreting is coming from that 18. So he's telling us that it needs to pull back more than 50 cents based off the way the stock is moving. So until it pulls back that much, everything else is basically a moot point. Everything else needs to be interpreted to be able to get there. Now, keep in mind, if all of a sudden we just see tons of buying and buying and off-level buying and buying and buying, does that change how we interpret how much it needs to pull back? Of course it does. Okay, but little prints like this are not. We would need to see a consistency of it happening there in order to actually pay attention to it. We know the stock needs to go up at some point, but these people aren't telling us that it needs to do anything right now. It's still, we need the stock to go into a certain price point on the pullback. 50 cents just isn't enough because, again, when they showed us that much at 18, what was really happening? What did they really show us? Remember, when we see prints that come out, it's the tip of the iceberg. So what they show us is basically showing us a small part of a major game plan. So for them to show us that much building, it tells us how much building they really need to do. The only thing that sucks is the 1750 level because it's just a pain in the ass. Psychological levels, I love when the stock goes to 20 and then starts coming back down because I got $2.50 before I got to worry about it being a pain in the ass. That's why when we're sitting in a consolidation like this at 1750, what percent would we have of our position right now? Derek says 30, we got a 45. Okay. So why is 30 actually too much right now? I mean, it's close, but just a little bit more than I would say. What's more important, locking in our profit or a stock coming out of a consolidation doing what we want? Okay, remember when we talk about possibilities. Okay, in a consolidation, there's technically three possibilities: a bar up, a bar down, or continue consolidation until one of those two things happen. The prints are actually at 18, right? The ask prints. Remember, everything we're looking at is based off of ask prints. So would I want to have a lot in my position at this consolidation? Would I want to have a high percentage of my, so the exposure is a shitty spot to be because we know the possibilities. When a stock breaks out of consolidation, is it a small bar or is it a big bar? Right? Technically, can a consolidation, even whatever the prints say, so if we get huge money flow of buying, it technically has two options. It can be there's enough buying that comes into it and it pops up. Okay, or because of that huge amount of buying, they're technically looking to then pull it back even more. But aren't both possibilities a strong percentage right now of it breaking up and breaking down? Technically are pretty damn close, aren't they? So what percentage of it breaking up versus what percentage of it breaking down based off of what we've seen so far can we assign? So breaking up, what's the chance percentage of it breaking up versus it breaking down right now? There we go. That's perfect, Keith. 60 down, 40 up. Okay. Anyone comfortable with those percentages? Anyone comfortable with flipping a coin with their money? No, right? Because remember, at the end of the day, knowing what a stock's going to do is only the first part. We have to be able to trade it. We have to be able to lock in profit. That's how we make money. So when you have a coin flip sitting there, is it smart to have a lot of your position? Now I want to break down why. If this stock is going to go and break 19 and get to 20, are we going to get an entry in it? We are, right? If this stock is going to break down, how much room? Okay, we're sitting right here in that consolidation, the low of the consolidation, 1736. Okay, how much room do we technically have to the downside? Give or take 36 cents. So is it worth a dollar bar hitting your position versus making another 36 cents as a trader? Does that make any logical sense? Because what happens is we get caught up that we're up within our profit. And whenever a stock is doing what you want it to do, what's our thought process? We want it to keep doing it. We want it to keep going. But we already have our game plan. And our game plan said 36 cents. So is it worth taking a hit on your position over 36 cents? When the chances of it going up are basically a coin flip. See how percentages make our game plans even easier to understand? We have to think that way because so many of us, guess what? Now the stock's at 18. So many people would have held it hoping that it goes the extra 36 cents. But was the extra 36 cents worth losing over 50 cents of your profit? Is that ever a good plan to take? No. Especially when we know that it still technically needs to pull back more. So more than likely, once it gets to 18, we're going to get another entry if we break down and it actually gets out of this consolidation and starts to break down. We have to think of things logically. Being a tape reader isn't just, knowing what the stock is going to do. It's also understanding the percentages of your trades and what the possibilities of what's happening right now within that trade are. I would never give up 30 cents, give up 50 cents to make an additional 36. Does that make any sense? No. But how many of us have sat in consolidations before after we know what the prints say it needs to do and have got barred up? I know if you're like me in the beginning, often, because I always wanted that little bit extra. I remember when I first started trading options, I used to miss entries because of like 4 cents on the contract. And then, when you think about it, like, how do you miss a trade over 4 cents? But it's the same type of thing. How do you lose 50 cents because you wanted a stock to make another 36? Just doesn't make sense. And we know the bar is going to be big. So technically, once we're at 1750, do we really have a trade anymore? Just doesn't make sense. Yeah. Now there's really not much left. There's not much of a trade. So if there's not much of a trade that's left, the possibilities are shitty. What do we do? Do we hold 30% or do we hold less? Well, not completely out. Remember, we always want to, but our exposure, we're talking about 15 to 10% because there's just not enough there. There's not enough there to the downside to make it worth losing to the upside. One of the things, that the whole goals of these classes is to really get you guys to understand how tape reading works. But tape reading and trading go hand in hand. We saw the selling. We saw that it shows a shorter term, but when you're in a consolidation like this, okay, and you see that much selling compared to the buying, it's telling us that really it's a coin flip, whether they just let it drop or they bring it back up to build. So anytime that there's a coin flip, what happens to our exposure? What has to happen to our exposure? Such an easy way to manage a trade. If it really could go either way, you shouldn't be in a lot of it. No, that sucks. Oh, looks like I just got hit with what you guys got. Oh, well, luckily we made it. We made it pretty damn far. Let me just restart. Let's see what's going on here. So, Derek, they logged you in, but they kicked me off. Oh, train station, you gotta love it. All right, so unfortunately, yeah, it's just says receiving initial data. I'm stuck just like you guys were. All right, let's open up for some questions. I know we have, like 10 minutes left, but let's open some questions. Does everyone understand why that was probably one of the easiest trades that we're ever going to see? How simple when we saw those 18 prints come out, did we know anything, or did we talk about anything else that happened previous? They happen over and over again, setups like that. Hell yeah, they do. And that's why we trade them. Remember, this entire methodology that I've created and I'm teaching you guys is all because it happens so often. Remember, percentages mean everything to me. If it doesn't have percentages, I can't trade it. Big aha, not holding out for the 17 target. Well, technically, remember, that's overall where it told us it needs to go, closer to 17. But at the end of the day, did it really need to get to 17, or did it just tell us over 50 cents that it needed to be lower than 17.50? Think about that. It needed to be over 50 cents. So we know that 36 cents, guys, to lose, to be in a situation where something could go against you just doesn't make any sense whatsoever. We also know something that brings us back to our original prints. The first time we came to 1750, what happened? Did we get the selling that anything that stood out to tell us that we were going to continue down underneath 1750? We did not. Now, if it was going to happen quickly, would we have? Yeah, we would have. So what does that tell us about what's going to happen at 1750? Is it going to be a quick job, or is it going to take some time because there's not as much interest? Extended. We need to know where retail is interested. Everything, my screens are technically up, but everything's waiting for data, and somehow all of my indicators are gone. Interesting. Okay, but do you see what, how, as one of the lessons that we need to learn is what was the interest as it came in? David Villars put out a great guideline for good habits. Could he do a write-up of this trade on paper for a review showing the steps and the print reactions? The trade is a good example to learn. Well, Keith, you're going to have the recording. You're going to be able to see every single thing that happened right on the recording. Okay, but I know, we spent a lot of time going over this, but you see how much information we actually needed? Once we saw those 18 prints, did we really need to know much more? Not really, because we got our show of N. The market maker told us, I am in control. This is what I'm doing right now. And it happened exactly the way they showed. That's all this is finding somebody that shows you this is what I'm going to do. And when they say this is what I'm going to do, we follow them. That is the key to everything. So if we saw a large amount of ask prints come in at 1850, would we establish that as a dominant market maker to follow now? Nope. Okay. What we would do is we would follow our 18. Okay. And the 1850, if 18 gave that big of ask prints and it pushed up to 1850 and we see huge ask prints, what is now our assumption? We have to make an assumption there. And what is it? Well, we're going to assume it's the same person. Because if anything, over print personality needs to come back to reality. It has to. Okay, that's why the prints don't lie. It's how it works. So if we get huge ass prints at 18 and then it just keeps going up, we get huge ass prints at 1850, I'm going to assume it's the same trader. Somebody's loading up. So now they're loading up at 2 levels. What does that tell me about the pullback? Bigger pullback, building even more. So the tip of the iceberg got bigger. If the tip of the iceberg got bigger, that means the bottom got bigger. That means their game plan showing us way bigger. So the bigger they're showing us, the better our trade is going to be. It's not like, for instance, okay, I teach you guys exactly the way the market works. So if a market maker, the dominant market maker, buys at 18, okay, the other market makers out there, do they want to be in higher than that market maker for the most part? Unless it's showing us, crazy off level that it's just going to run and go crazy. But that's not what this stock showed. So no, we don't want to be in above the market maker, neither do they. So if someone's buying at 18 and then right at 1850, all showing us building, who do we make the assumption is building? Same person. Just like I'm not, when I see beautiful S prints at 18, I'm not getting in at 1850. Hell no. I'm not getting in until it pulls back. Okay. And well, technically, I'm going to get in for the pullback, but then to go long again, I'm not getting in until I have a better entry, because that's what they showed us needs to happen. The more levels that it prints at as it keeps going, okay, the higher the percent chance it all happens at once. And we all know what those trades look like. They're just the most wonderful things in the world. You hit short on a trigger, and then they just get hammered. These guys, the 1 through 4 trades, I don't think you guys understand how lucky you are to have it broken down this way, because you just see them over and over and over again. So the 1 through 4 helps us. We understand stock going straight up, we're looking for a number 1. Stock going straight down, what kind of trade are we looking for? A number 3. We don't chase ever. If you chase, you will lose. Retail chases. Okay, retail chases movement. We do not chase movement. We look for the opposite of what they're showing. Okay, the reason behind that. Okay, anyone ever feel like if I just did the opposite of all my trades, I'd be successful? Anyone ever have that feeling before? It's almost like the second you click, it goes the opposite way. It's like someone's sitting behind you. That's because they're leading you into it. So they're showing you this great movement. And guess what? How many retail traders succeed in trading? Remember this percentage. How many retail traders? 10%. Okay, and obviously that, it has a lot to do with uneducated and so on and so forth. But if that means that every time a stock starts to run, retail clicks, but 90% fail, can we ever take that trade to the upside if a stock is running straight up? No, because 90% of people are going to fail. They're going to get hammered. So if we know 90% of people are going to fail, that means that 90% of people are going to have their money taken from them by following it. Guess what we look to do? Makes its life so much easier. So if 90% of people are going to fail chasing it to the upside, where do we want to be in? To the downside, the opposite. We don't fail here. We know what they're doing. We know what retail is doing. Guys, take lessons from retail. I pay attention to retail all the time. I pay attention to what levels the retail comes in real hard. I pay attention to everything that retail does, because I know if I do the opposite, I should be good. So if 90% of people are failing, acting like idiots in the market, I'm going to be the 10%. Okay, I know that anytime a stock pushes up, people like to buy it. I know every time a stock pushes down, people like to short it. Okay, guess who else knows that? Guess who taught me that? Who else knows that? I've been doing this for a long time. Who else knows that when a stock pushes up, people like to buy? The market makers. So when they see all these retail getting all happy, they're up there 20 cents, they're 50 cents. What's the market maker's job to now do? Crush dreams, ruin accounts, make their bills late. We don't want to be part of it. And that's the whole point of these classes, is understanding what they do. People don't get to make money long term in the stock market unless they go like really long term. Obviously, if you bought anything like in the S&P and held it over the past 15 years, you'll be okay. Okay, but that's long term investment. Okay, long term investment. Can they take all the money they need to build a position from long term investors? Long term investors are useless to market makers. They'll take a few shares here and there. Who are they really taking the money from? Think about it. When a market maker needs to build, who are they technically taking the money from? Yeah, traders, the swing traders, the day-to-day traders, the day traders. Okay, shorter term trades, because there's more short-term trades that you make, the more that you put out there, the more shares that are available for them to take from you. So we have to understand these things. We have to understand when a stock goes up, we got to look down. That doesn't mean that the down trade is there yet. We have to let the market maker show us that the down trade is there. Okay, but it's coming down. It's that simple. This is really bothering the hell out of me that my trade station won't go up. All right, guys, do we have any questions? When I saw, hold on, Tracy. When I saw the off-level print personality on the bid, you discussed it was noise, how to filter and determine that noise. I would have used those. So the thing is that we have to look at things that stand out the most. When we came down into 17, there's intricacies that we need to be able to follow. When we saw it come down into 1750 the first time, did we get any real interest there? Did we get any interest at that 1750? And as we know, the answer was no. So what does that tell us about the 1750? In order, if they're going to bring it down, they're going to make money bringing it down. So is it going to take a longer time period, or is it going to take a shorter time period? Well, we know if there's not enough there. Remember, these moves, they know are going to happen because they're doing them. So think about it in your own head. All right. Let's say I gave you $1 billion. Okay, and you know the stock is going to go down 50 cents. How long are you going to take to build your position? If I gave you $1 billion right now in your account, how long are you going to take to build your position? It's a very simple answer. However long it takes you to put $1 billion into it. That's simple. So we don't know if they have $1 billion, or if they have 100 million, or if they have 1 million. We don't know the answer to that. But what we do know is that it needs interest at the levels to be able to build anything substantial. So when we don't get interest at those levels, they have to create an interest in a different way. And in this stock, it was being able to push it up to 8, back up to 18, because now everyone thinks it's going back up. It's got the trend. It fits all the stupid shit that people get taught with support and resistance. And if you like a stock, you press the button and buy. Whatever crazy people say that don't really know what they're doing. See what I mean? But it's going to take the amount of time for them to, because they know what's happening. They know what's going to happen. So it's going to take as long. So the less interest we see at a level, the longer it's always going to take. Now, we know that for every level, but then now let's add 1750 into it. I literally have no view of anything right now. Trade station, you let me down. At least I was good for the morning. All right, but you see, does everyone understand? So, understanding the prints is just sometimes it's just as important to understand there was no prints there when there should have been. 1750, there should be a lot of interest. There was not. So what that tells us is longer term across the board. Make sense, guys? Quick question, the same scenario, but on the way down from 19, we get huge bid prints at 18. Do we still base our game plan on the original ask prints at 18, or would it be from the bid prints? Yes, we do, but we have to take our trade a little bit different. So as it comes down, if we get huge bid prints at 18, we have to understand that it's showing us building if it's over print personality. So now the stock's gonna go back up, but then come back down to fit the original game plan. So those 18 ask prints are the dominant market maker, but the bid prints that came in at 18 would be who? Who would we assign that person at 18 to? A rider. It's a rider that knows that the original ask prints at 18 need to pull back more, so those big bid prints at 18 is showing us an extended pullback. So if we know it needs to be over 50 cents, now we pretty much know it needs to be over $1 after it pulls back up and then that trade comes in. Because what happens first? Okay, riders making money or the overall market maker making money? Who makes money first? The riders, always. Just think about that. The person that's making the giant building, the people that are making money off their building happens first. Why do you think a number one trades our number one trade? Makes sense now, doesn't it? Our number one trade is someone showing huge building, but going down immediately. Because when it's time to build, it's time to build. When it's time to make money, it's time to make money. But when they show us the tip of the iceberg that it's time to build, building needs to start now. Because at the end of the day, the longer you wait, there's no reason to. Okay? When we pull back to build, they have to build for as long as how much money they want to put into it. So that's all dependent on volume and the interest levels at those certain numbers. Just like 1750 didn't have a lot of interest there at the first time. So that means that they have to bring it back up and they have to play this whole game going into it. All right, but the movement to the downside to build had to be there first. So everything goes from the original game plan that you saw. Get beautiful ask prints at 18, it pops up first, comes down, you get bid prints. Those bid prints now take over happening first because they need to make their money building. They're riding the building movement until that person is ready to now make their money, because at that point they cover and then help the building at 18 and help those prints at 18 go higher and go into money time for the original dominant market maker. Everybody with me? I apologize about what's going on, but it's unfortunate. There's nothing I can do. TradeStation just isn't playing nicely. All right, guys, we're all good. Cue the Robin Hood. All right, I will talk to everybody in the chat, and happy trading.